Happy holidays to all of my traders. I have the Triple Q's daily chart. Now, let me explain something to you. Okay? We had the October 5 rally start here. We make a top. We fade. Today, the month of August had no volume. I don't care what anyone says. You had no volume. Hedge fund managers hired programmers to develop automatic buy and sell scripts that go into their brokerage account. They don't even pull the trigger. It does all the trades for them automatically. Okay? They took advantage of taking this market higher with zero volume, hardly any volume at all on the triple Qs. And the triple Qs made a high here. And at that point, we were 82% stochastic. Now, unfortunately, yes, that is going to be resistance. Yes, September can be a horrible month, and so can part of October, and we know that. And we took another short today, right at the close, buying. Let me show you the options that we bought. Now, you'd be crazy. You have to go to November 15th. That's 77 days. And we bought the 480 puts, and we bought the 490 puts here. We were hit at 2140. 2138 was the low. They closed at 2533 on Thursday. Okay, but there was no volume in this move, and there wasn't. There was no buy side volume like the sell side volume here, or when we went short up here. It was on the side. Everyone knows it. Here at the 200, you had to go long. Yes, that is resistance at 481.07. So when we open up Tuesday and everybody comes back, all your players that are on vacation now, that's why there isn't any volume, they got away with it. They got away with it illegally. They used software, not humans pulling the trigger. No, they set the human in front of the computer. They're told if they touch it, they're fired. The computer does the buys and the sells. All the human does, the trader, is simply watch. That's all they're allowed to do. They built the software. This is not AI technology. No, this is high-frequency trading. When it's easy. I can walk a stock up $3 or $4 just by buying 50 shares or 100 shares. I buy above the ask. That takes the price higher. That's what happened. Now, the only good thing we have going is the time. We have the time. We bought the 490s. We got 4 of those. And we bought 4 of the 480s, and on the 475, we bought 4 of these. 475, then we got the 480, as you know, and then the 490s. And we hope to go ahead and make at least 5,000 on those puts next week. Everyone's going to be back. I can just tell you that the volatility for low volume, let me explain this to you. No volume, but volatility was 19% in the month of August because of August 5th sell down to the 200-day moving average, and you had to buy it and go long the minute it popped a buy signal on the MACD. Now, the CCI was way up here. Here's where the CCI was, 133, Commodity Channel Index. Now that indicator is down here, and the CCI is only 46.7. What does that really mean? It really means that a weaker CCI means that the Qs are weak, and when sell-side volume continues, this thing could drop $7 or $8 in 2 hours. Or how about this? Tuesday morning, you open up, pre-market, Qs are gapping down 5, they went up 5, they gapped down 5, we cash in. Our price target is right here. That's the 100-day. That's our target. That's at 460. Then down here, where we had resistance at the 150-day, it gapped above it there. Well, when you pull back in volatility, you have a great opportunity to test it. Once that happens, we come out of the puts and we buy calls to go higher. Once again, join us. Stay with the triple Qs. Watch the damn video.